participants are in listen-only mode.
Ladies and gentlemen, good morning. Welcome to MADARA Cosmetics Investor Conference webinar about financial results and company's activities of the second quarter of year 2018. Today we are hosted by MADARA Cosmetics, member of the board and shareholder, Mr. Uldis Iltners. Before I give the floor to Uldis, a short reminder about the agenda of the webinar. As always, we will start with the company's presentation, after which Uldis will answer all your questions. If you would like to use this unique opportunity to ask a question directly to Mr. Iltners, please use the question box on the right-hand side of your screen. All questions will be addressed after the presentation. However, you can send the questions in during the presentation. Uldis, I invite you to start the presentation.
Thank you, Elizabeth, for introduction. Good morning, dear participants. Thank you for joining the MADARA Cosmetics webinar. Today we will present the management report on the unaudited financial statements for the first 6 months 2018. You are welcome to send in your questions and I will be glad to answer them at the end of the webinar. My name is Uldis Iltners and I'm still the board member and CEO of the company. A few words about the company. MADARA Cosmetics is the leading and fastest growing skincare producer in Baltics, specialized in production of certified natural and organic cosmetics. Our brands MADARA and MOSSA hold leading positions in Latvia and Finland in corresponding segments, and we have a good base for further growth. We have a fantastic 6 months behind us. In the first half of this year we have accomplished many important tasks and achieved nice results, which continue the established growth trends. Turnover increased by 30%, EBITDA growth plus 18.6%. Net profit reaches 39.8% increase comparing to first half of 2017. 92% of the turnover came from EU countries, including Latvia. The proportion of EU countries increased by 4 percentage points comparing to corresponding period last year. And this is according to our sales strategy, where EU is set as our focus region. Looking at sales distribution by product categories, MADARA, MOSSA and contract manufacturing, we can see a slight proportional increase of MADARA and MOSSA brands, which is good because these are our brands, our core business. Also, the sales division of MADARA products by product groups retained former tendencies. The most important categories are still facial care products and anti-age cosmetics. In comparison to 6 months 2017, the proportion of facial care and anti-age cosmetic groups increased by 4 percentage points, making together 74% of MADARA product sales. Here we can see the overview of financial results. The consolidated turnover reached 4.66 million euros, which is 30% increase comparing to last year. Growth was driven by strong sales results in our biggest markets, Latvia and Finland, where we successfully continued to strengthen our position being a number one brand in natural and organic cosmetics. Compared to 6 months last year, we have managed to improve our gross profit margin by 3 percentage points, which means that our core process production of cosmetic products became more efficient. At the bottom line, we generated almost 1 million euro profit. Operating and net profit margins reached to 21%. In first 6 months this year, we had proportionally higher selling costs than last year, and this is related to active marketing work in our main markets. We had quite big sampling campaigns in Latvia, Finland, and other markets, and we believe that these activities will increase the brand recognition, and which gives a good potential for further growth in future periods. The revenue guidance for this year remains 10 million euros. We are expecting to continue to grow in all our existing channels, plus start several new channels and customers in the second half of this year. Here we have listed the key events for the first half year of 2018. The number one, really a big success, is our new sunscreen product line, which is based on mineral filters. And our assumption that there is a quite big demand for this kind of sunscreen products was right, and this was as a result, this was the most successful new product launch since years, and all 4 new sunscreen products ranked among top 10 bestsellers in the first 6 months of this year. Then, besides very successful launch of sunscreen products, we had also very nice other new products. We launched booster ampoules, 3 products, Regene mask, and 2 new fragranced soap bars, the names Volcano and Charcoal. Then number 3 is that we very actively worked on e-commerce and IT projects. The current e-commerce system got several important improvements, and is equipped with new clever tools that helps the system's operating efficiency. And we implemented also several IT projects with aim to automate our processes, and probably the most important IT project is implementation of business intelligence system, which is installed in all our departments and is analyzing quickly huge amounts of data and helping employees in all departments to make their decisions quicker and more precise. Altogether, in an e-commerce system and implementation of new IT projects, we invested 113,000 euros. Then the next important event, we are continuing to improve also our manufacturing processes, and 2 new filling machines were ordered. The first one is filling and capping line for bottles, and the second one is high-performing tube filling line. And we expect that both machines will be supplied and installed by the end of this year. And this will be a rather big improvement in our filling and packaging process. So we will be more efficient. We will be able to process different kind of bottle formats, be more flexible, and be more fast in filling the tubes. And we got also several new sales points. Here are listed only some of them. The most prominent is probably John Bell and Crichton in London. Also Selfridges cosmetic departments in United Kingdom, Hekhu chain in Finland, Apotek Boots in Norway, pharmacy markets in Albania, Unipatica chain, also pharmacy chain in Hungary, and we are also slowly building up our distribution in Northern America, and so got several new customers, and the biggest customer is Healthy Planet from Canada with 20 sales points. The financial statements show the results we have achieved, but the ESG reporting describes the values and working principles behind the financial results. Last Friday we published our second ESG report about the last operating year, 2017. MADARA is also part of Nasdaq Nordic ESG reporting pilot program. This program aims to encourage more listed companies to start ESG reporting practices. Here are listed some key indicators. What we can see then in many indicators we got the improvements. If we look at the CO2 emissions, then in 2016 it was less, because in this number was counted only our production at Zelting Street, and until September 2016 we had 2 locations, so it means that it was less because there were two productions at that time. We managed to reduce the energy intensity per one product manufactured, so it dropped almost for 1,000 kilojoules. And currently manufacturing of one product takes approximately the energy of nutrition value of 2 big bananas. just to give you an idea what means 1,777 kilojoules. We increased the renewable the percentage of renewable electricity used in our location in Zeltiņu Street to 60%. CEO pay ratio is still looks very good comparing to average in EU and average comparing to our competitors. So good for investors, bad for me. Board diversity still very much led by women. Gender diversity in company overall, it's 72% from all employees are female, and there is no payment gap between man and female. And then here listed some other indicators. We also donated to NGO Marta, and with 20,000 euros in 2017, and with this money they were able to consult 365 women plus 200 children and youngsters. This number is not listed here. But I'm really inviting all investors to read our ESG report besides the financial statements, because this show the way we are working and the values. So some cosmetic sector trends. What we can see then natural and organic is hot topic globally and in Europe, and what's probably more important, it is expected to remain hot with a very nice double-digit growth rate, and of course the total market, global market and European market is comparing to current company size is huge, and in the same time also fast growing, those giving us good potential for further growth. And as you can see then in Europe, the biggest by far the biggest market for natural and organic cosmetics is Germany, and German market alone in 2017 increased by more than 1 billion euros, or probably dollars, United, so not sure. Oh no, sorry, euros. So the market is huge. So we also have quite nice developments in Germany, and yeah. So all in all, we feel very comfortable within with the current situation and trends. And yeah, this was my presentation for today. In appendixes you can find the financial statements, and now I am ready to answer your questions. So I give word to Elizabeth.
Uldi, thank you for the presentation. Now I will proceed with the questions in the order they were received. A reminder to those who haven't yet submitted their questions, you can do it in the questions section in the settings panel zone. So the first question is, how you would describe added value of having supervisory board at MADARA? What are the main issues that board is focusing on?
Thank you for the question. Supervisory board is, since listing our company, this is a new body in our company, and we are as member of management board. I can tell that we are doing and implementing everything that Latvian legislation is requiring, and according to our articles of association, there are certain points we need. The management board needs to agree with the supervisory board, and this is of course done in full. And of course for us, it's for management board. It's probably it's good because we can get some consultations. So we have also very good add to our supervisory board, Annu Koskinen from Finland, from Transmeri Group, and she has a very big experience in working in cosmetics market in Finland. So besides those points which we need to agree according to laws and articles of association, we are also in everyday communication with the board and asking their opinion about important and not so important things. So we are in everyday communication, and I would say that it is helpful for the management board. The next.
Thank you. So the next question is, what were the main drivers behind such good improvement in gross profitability in the first half of 2018?
Thank you for the question. So since part of production costs are fixed, and actually quite big part is fixed, then by increasing the production volumes, the fixed costs are not growing, and this is the reason why we were able to improve the. This was the main reason why we were able to improve the gross profit margin. Also, as we could see, then sales of facial cosmetics and anti-age cosmetics slightly increased. So these products are sold for higher prices, so probably also the average selling price slightly increased. So this probably also might add a small impact to the improved gross profit margin, but the economy on scale was more important in our case. The next question.
Do you expect selling expenses to remain higher than normal for longer period?
Currently we are very much focusing and developing our main European markets and go deeper in those markets, and we are implementing some additional marketing and sales activities that were not done before. However, we are expecting that these activities will give increase in our sales results in further periods, and I would assume that the selling expenses will not go dramatically over this proportion of selling expenses we had in first half of the year. So we are still very much looking to be profitable and to keep the current profit margins. Thank you.
Thank you. So the next question is, did the company pay for new equipment ordered already in the first half of 2018?
Thank you for the question. Yes, so the equipment was ordered in first 6 months of 2018, and the first payment amounting to 40% of the equipment value was paid in the first half of this year. So it means that in the second half of this year we will need to pay the remaining 60% of the equipment value. Thank you.
Thank you. All questions have been answered.
Thank you very much for joining the webinar, and I hope it was interesting for you. And yeah, so we are continuing actively work and feeling very comfortable with the current situation. Thank you. Bye.
As always, recording of the webinar will be available in the Nasdaq Baltic YouTube channel and in the company's announcements later today. Uldi, thank you for spending the last hour with us, and participants, thank you for joining.
Thank you.